Hello and welcome to this August 9th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Before we take a look at today's Chart of the Day, I am pleased to announce that I will be hosting our first quarterly premier Active Trader Series event on Tuesday, August 10th at 4:30 p.m. That's Eastern Standard Time. This event, which is entitled Scanning Strategies for Active Traders, is quite timely given the nature of the back and forth whipsaw market that we've had to experience for the last several months. Buying and selling at inopportune times can be very costly, but in this 60-minute presentation I'll show you some of my scanning techniques to find stocks with low risk, high reward entry and exit points. I believe it will be equally beneficial to both those who are advanced traders or consider themselves to be skilled traders and those who are still learning technical analysis. To find out more information about this event, simply go to our website at investedcentral.com. Once you're there, click on the Learn More button under the Active Trader Series discussion. Okay, taking a look today at our chart of the day. This is Benchmark Electronics, ticker symbol BHE. This is a slightly more than a $1 billion technology company. Going back to early July, you can see the stock, first of all, back in late April, topped, came down, and by the way, on this top, I didn't mark it here on the chart, but take a look, higher prices, lower MACD, so we had a negative divergence at the top. We came crashing back down. Each one of these moves down, we kept bouncing at the 20-day moving average, which is this green line, until we got down here to the bottom, put in this reversing candle, which is either a hammer or a doji, depending on how you look at it. Could be a long-legged doji, or it's got a small body. Could consider it a hammer. But nonetheless, we did have a lower low in place, a reversing candle, and with that lower low and reversing candle, check out the positive divergence that had formed at the bottom. So up here at the top, we had a negative divergence that led to a lot of weakness. Now we've had a positive divergence, and we've seen that play out back to the 50-day moving average. Now the question at this point is, did this positive divergence mark a long-term bottom? Are we ready to make a big move to the upside? Or was this positive divergence simply unwinding during this uptrend back to the 50-day, the MACD back to the center line, and then head lower? It's really impossible to tell at this point. We just have to look at the action that unfolds in the days and weeks ahead of us to make that determination. But at this point in time, it is a high reward, low risk trade really on either side of the equation. We're favoring it on the short side, but you could make bullish arguments here and simply say, hey, if the stock takes out 1650 to the downside on a closing basis, maybe 16 and a quarter on an intraday basis, I move to the sidelines if I want to be on the long side. We're actually taking it from the short side because we are beneath the 50-day moving average. The volume trends are still favoring the bears. You can see the volume was very heavy on the way down. Not bad on the way back up to the 50, but the volume's been coming out again recently. So if you see a break above, say, 17 and a quarter with increasing volume, we'd be a little bit more nervous on the short side. But until we see that, we actually think that the reward to risk is better on the short side of the trade. Notice that once we broke down below the 50-day moving average back in May with very, very heavy volume, and we failed on the retest to the upside, check out the RSI, which had been between 50 and 70 for months. It came down, broke below 50, and since then, the highest we've been able to get to is back up to that 60 resistance area, which tends to mark the highs in terms of downtrends. You normally don't see the RSI go up much above 60 during a downtrend. So you've got the RSI, which is starting to roll back over, now back down at 48 and change. Stochastics, which were very overbought recently, have kind of come back down into the neutral range. And the MACD, which had gotten all the way up just above the center line, now looks like it's got a little indecision there, looking for a direction here. So we'll see, but we like it on the short side. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.